Welcome to the D-Shift podcast, where we provide inspiration, motivation, and education to help you transition from the challenges of divorce to discover the freedom and ability to live life on your own terms. Are you ready? Let's get this shift started. Hello, and welcome to another episode of the D-Shift podcast. And coming up on the new year, it's a great time to take a look at finances and maybe have some insight into how you should be managing your money and what you should be considering. And today I have the perfect guest to help you kind of weed through some of that complicated stuff. Neil Palache is a divorce consultant and founder of the Wealth Creator Company for Women. He specializes in financial coaching for over 15 years. And he is also a founder, and I want to make sure I get this right, of the Divorce Transition Professionals, which is a national network that he started in 2017 to help divorce professionals understand more about divorce and what everybody on these divorce teams is doing. So, Neil, welcome.
Thank you. I really appreciate it. Thanks for having me.
Well, and I'm like I said, I always appreciate it when financial people come on here because this is something that's definitely not in my wheelhouse. So, Neil, tell us a little bit about how you got started in this and like how did your passion for financial management come about?
Well, thanks for asking. Yeah, I started, believe it or not, in the life insurance business back in 1983. Worked with a life insurance company for 15 years, became a registered investment advisor. So I was in the financial services space for 25 years and then decided I want to go a little different direction. I obviously I don't want to give up the financial world. That's what I knew at that point. But the consulting and coaching side of the equation seemed like the place that I wanted to be. I didn't want to manage money anymore. I didn't want to sell insurance and so forth. So I actually hired a coach. You hire a coach to find out kind of who you want to be when you grow up, right?
Right, yeah.
So that's where I was. And we talked about a lot of different things, but eventually she just kind of said, look, I think you should be working with women. And I think working in the divorce space, she said divorce and widowed at the time. It's almost completely in the divorce space at this point. But for the last 15 years, as a result, I've been working with a female clientele on pre-pending and post-divorce financial issues, but not getting into the transactional stuff. So that all gets referred out. And DTP, the Divorce Transition Professionals, kind of came out of that in that a few years later, realizing and experiencing the fact that it's a collaborative effort. I mean, when somebody's going through a divorce, there are at least a handful of professionals involved, if not many more. And why not develop a group where those folks could collaborate, network, and grab a bagel and get to know each other and, help people. And so we started that where I am in Westlake Village, California. And we now have 28 chapters in several states across the U.S. So it's working out very nicely. Yeah. Lots of people are getting helped.
Thank you. And thank you for establishing that. I think the more that all of us who work in the divorce field are aware of what services are available for clients, because you're right, the days of going to just an attorney to get a divorce, which I did when I went through my divorce, because that's what everybody did like 20 years ago. Nobody even thought that there was all these different professionals to get involved. Right. And so I just want to throw this out here. If you're going through a divorce and you've been married, maybe a year or two, you've got, you don't really have any investments. There's no retirement. There's not a lot of anything there. And that's valid. I mean, that's life, right? Sure. You probably don't need to look at having all these professionals, but if you've been together for a while, if you've got real estate and you've got investments and you've got retirement plans and you've got, maybe different properties and things like that, not hiring the right professionals, you're either going to pay for them up front or you're going to pay a whole lot more by either leaving stuff on the table or trying to modify orders when you find out, oh, I could have claimed that. And in reality, Neil, right? Sometimes once you sign on the dotted line of your divorce, too bad, you've lost it. If you didn't know it was there, it's gone.
Yeah. Yeah, that's very true. I mean, people know, typically they know that, spousal and child support can be adjusted. Nothing's in stone, right? Somebody can go back and say they need more, or I don't want to pay as much, or whatever their situation is. But once assets are split, I mean, I would imagine maybe there's some case precedent for fraud, like if there's
Yeah,
fraud.
yes,
But I mean, you can't just go back and say, "Oh, I made a mistake. I wanted that house, not that house."
yeah, yeah.
It's kind of a done deal at that point.
And I actually met with a forensic accountant the other day who specializes in tracing hidden assets and those kind of, or
Hmm.
you know, foreign bank accounts and crypto stuff and everything. And they were
Right.
saying even sometimes that you may be aware that the account existed, but it's been drained and the money's gone somewhere else. And so you might spend more trying to recover it than what the amount you're possibly
What
going
it's
to get.
worth. Yeah,
Yeah,
exactly.
yeah. So talk a
Yeah,
little
you.
bit. No,
Sorry,
I'm
go ahead.
sorry. No, can you tell us a little bit? Because I heard you say you don't deal with the transactional stuff. Can
Hmm.
you kind of give us a broad picture? If somebody was to come to you, what kind of
Hmm.
services would they be expecting, or would you be providing for them?
Right. So, there's the three stages essentially, right? You've got the pre, the pending, and the post divorce. And in the pre, and I have a number of clients that come to me pre-divorce. I'm glad that they do. I wish more people would, because I think people just don't really get it. And then they get hit in the head with a two by four, like
Right.
really what they're getting into. So the pre-divorce stuff is all about gathering information and having my client understand what's there, what are the probabilities. There's never any guarantee, but what are the probabilities in terms of, is she going to have to be paying spousal support, child support? Is she going to receive? Is it going to be a break even? And the assets, yeah, assets are 50-50. But what assets? It's not 50% of each asset, it's 50% of the total. So, do I get the house? Do I want the house? The rental property, if you have them, like you said, there's lots of different things, right? You've got retirement plans, and there's different tax issues with retirement plans versus real estate, and, all of those things. And some of it is finding information beforehand. I mean, unfortunately, even though things are more equitable in terms of men and women, there's still disparity with regard to access to information and knowing what's going on in the financial household for some women in some families. So you've got to prep them a little bit to say, okay, I want you to be a little bit of an investigator here. Let's go find some stuff,
Right.
if you have access to it and so forth. So in the pre, we're putting together some spreadsheets. We're putting together budgets, like what's your life going to look like when you're living in the house on your own with the kids, if you have kids, or you're the one that decided that you wanted to move. Are you going to go rent or buy something else? And what's that going to look like? And what kind of assets you're going to have. And even at that point, I'm going to have her talk, to a lawyer, to a mediator, to a realtor, to a financial advisor. So I'm introducing her to a lot of different people, because in many of those situations, she doesn't have those relationships.
Right. Yeah.
He does, right? Or is his buddy from college or whatever it may be. And so it's a matter of then her beginning the process of starting up her own team. So that's in the pre. In the pending, I'm less involved. I mean, there's, you got to fill out FL forms, and I help with that and so forth. But I'm less involved because hopefully there is a good lawyer and or a mediator involved in that process. And then in post-divorce, then there's a lot of things going on there, because I work with a lot of women who want to either upgrade their career and or their business, or they want to get back into a career and or a business. And so now, where's the money going to come from? What does that look like? Do you have the qualifications? Do you have to go get some level of education that you didn't have from before, or do you have to get refreshed?
Right.
What are we looking for? So it's a different type of discussion, because now they know what their income is, they know what their assets and liabilities are. So now, what do you want to do? How are you going to do it? So, and I'm talking about everything from literally from their Verizon phone bill to their mortgage payment to their business line of credit to their credit, their
Right.
actual credit, and then the transactional stuff is, hey, here's the financial planner that you might want to work with, and here's the realtor, and here's the mortgage broker, and you've got to redo your wills and trusts.
Right.
You got to have all your insurance redone. There's a lot of stuff that has to be done.
There is. And a lot of times, I'm seeing more and more where the financial stuff of the divorce is so complicated that the lawyers, and this is nothing against lawyers, they're not supposed to be financial advisors. They're supposed to do the law, but they are just looking at like dumping everything in a basket, and then you get half and somebody else gets half.
Right.
And like you were saying, there's a huge difference between $1 in a retirement plan, $1 in real estate, and $1 in a savings account. Those are not the same dollar, right? And I think most people, and I'm certainly not an expert, I'm just aware of this because I spoke to so many professionals like yourself, but most people aren't aware of those differences, and certainly not the long-term tax issues and the concerns about how am I going to, is this a liquid asset? Or is it going to be an albatross around my neck when I get out of the divorce?
Yeah, exactly. I mean, those are important discussions to have, and ultimately those decisions need to be made. It's not like you can discuss them and say, okay, I'll deal with that down the road. I mean, when you're splitting assets, if you want to finalize everything, decisions have to be made.
Right.
And so you've definitely, something as simple as, okay, here's my house, and we bought it 20 years ago, and now there's a lot of equity in there, and we may need to sell it. The difference between selling it while you're still married, even though you're getting separated and it's happening, but while you're still married, versus selling it when you're single, if you're the one getting the house, is potentially the tax on an additional $250,000, right?
That capital gains difference, yeah.
So that one day between married and divorced, because it happens literally overnight eventually, right?
Right.
Could be $100,000 of tax.
Yeah.
Depending on your tax bracket. You say, holy, that's a big mistake.
Right.
You got to really look at that. It's one thing making small mistakes. Big mistakes are really painful.
Well, and the other thing that I'm seeing more and more, at least with my clients, some of the post-divorce clients I'm getting is, or post-divorce litigation clients I'm getting, are they took the house but didn't realize what the taxes, the maintenance, it's an older house, the roof all of a sudden needs to be replaced and the insurance isn't going to cover it. And there's, there can be all these things, and having somebody like yourself to highlight that money side of any of these decisions.
Yeah.
Yes, you're going to pay for a professional to do this, but the money that you're going to save by making the best choices is immeasurable in some cases. Yeah.
Almost always exceeds whatever you're going to pay a professional. I mean, if you've got people out there, because you have people out there that know what they're doing in this area, that you will always make money, I think. I mean, always is a hard word, obviously.
Yeah.
But, I mean, and this is perfect because in DTP and in the divorce transition professionals, our mission and tagline is making divorce just a little bit easier. That's our tagline. And the reason that we say that, I mean, first of all, there's no easy divorce, but you can make it easier by having the right professionals in place. And when you already know there's good professionals and bad professionals
Right.
in every industry,
Yeah.
right? You already know that. Well, in the divorce space, you can have a really good professional, but they don't know enough about the divorce space.
Right.
And so there's a difference there, and the timing of things that have to happen and when they have to happen and so forth. You've really got to have somebody that understands the divorce space when you're buying and selling a house or a mortgage or financial planning, in addition to their normal expertise in what it
Right.
is that they do for a
Right.
living.
And I think that's really important. There are, in most things, like a divorce financial mortgage person. There's a divorce
Hmm.
financial planner. There's
Hmm.
a divorce lending professional. There's all these people that specialize. I just had a client who went through a divorce, was talking to the current. She was going to keep the house. Spoke to the current mortgage holder and just said, "My income is going to be whatever it was." $8,000 a month. And she had lumped her alimony into that because in her head, that was all income. Well, when they actually came to write the mortgage, because she couldn't just assume it, it had to be rewritten. They went, no, we can't count this alimony as income because you haven't had it for 6 months and it's only going for 3 years. So it didn't qualify. So all of a sudden she couldn't qualify for a mortgage, and now she's in a house and can't qualify for a mortgage. So
Yeah.
I mean, that was a
Yeah.
horrible situation, but it does happen.
Yep.
Neil, what are some of the common questions or concerns that women have when they come to see you about their finances? Let's go pre-divorce.
Hmm. The the main thing is kind of, am I going to be okay? Like, that's the general question, right? Am I going to be okay? If you've got now, I just got hired by a woman who makes, $250,000 a year. So she's not worried about that piece of it, right? Her income and her ability to pay expenses and all that is great. But when you've got a situation where my client is either making no money or is making under 50,000 or under 40,000, depending on where you live, in Southern California, like, you can't live on that. So then it's just a function of how much money is going to be coming with regard to spousal support and child support, and how does that calculation work, and what are the probabilities? Because again, you've got the temporary support and the child support, which is calculated by the DISO master. But then when you go to permanent support, the number, particularly for spousal support, can actually be quite different than what was paid in the temporary support. So you've kind of got to understand that. And now, you don't have taxes on spousal support like you used to.
Right.
Now they've adjusted the numbers for that, but nevertheless, now you've got income, and that's another thing. Like, when you've got income that isn't taxable, and you've got this mortgage over here that you're paying, and you think, oh, well, I've got a tax deduction. Yeah, but you don't need the tax deduction because your income isn't taxable to begin with. So again, you've got this little bit of disparity and misunderstanding as to what can work well. But the main thing that women almost always ask me about, particularly when they have kids, is, I don't need to live in a palace, but are we going to live somewhere where the kids are going to have their own bedroom, let's say, and we're going to be fine. We're going to be okay. And, if we want to go out and have a little bit of fast food or whatever, am I going to be able to pay for the extracurricular activities the kids are doing at school? And,
Yeah.
it's that kind of thing. It's a different conversation. I don't have a lot of conversations with men anymore, but it's a different conversation than you would have with a man, for sure. There's a different focus.
And so here's what I'm finding. One of the things that most of us as divorce professionals, we only work with people that know that they're going through a bad divorce, or there's the potential for it to be a bad divorce. Because I do some other work in another area where I also work with women, but they're not my divorce coaching clients. A lot of people, especially younger people. So I'm just going to throw this out there. A lot of people seem to be more aware that there is a benefit to having an amicable divorce settlement where both people walk out and feel maybe not whole financially, but at least don't feel like they got, for lack of a better word, screwed over in the divorce. Because in the old days, like when, I mean, I'm old, I say in the old days, it was the goal of divorce was to take the other, just hammer the other spouse.
Take him to the cleaners, right?
Yeah. And there was the impression from men that women always got the kids in the house and they got, they were working forever paying alimony. And then the women always felt that the husbands, weren't paying their fair share. And I'm seeing a lot of the younger people are really making a better process of this divorce. So yeah.
I agree with you. There's definitely more mediation. There's more collaborative law going on. Less litigation. I mean, litigation sometimes is necessary, but it's extremely expensive.
Yeah.
Nobody's happy. Well, I guess one side could be happy, but if they're happy about what they got, they're unhappy about their lawyer's bill. So nobody's really happy at the end of the day.
Yes.
And all of that money that's being spent by whoever it's being spent by is all coming out of community property assets.
Right.
So each party is getting less at the end of the day.
Yeah.
So, and it's, in fact, I was posting on Facebook the other day about people who ask, you'll see these posts, or at least I do. Can somebody recommend a shark lawyer?
Yes.
That'll be the question. And I posted the other day and I said, it makes me laugh a little bit about people who ask for a shark lawyer, because I understand what they're looking for. I get it. But the reality is you really don't want to go for revenge. That's not going to work well. At the end of the day, what you want is a lawyer who can help you to solve this problem.
Yeah.
And they can do it in the most efficient, effective, and hopefully least expensive way. So at the end of the day, you don't have to be friends, but you can just be decent to each other, particularly if you've got kids. You may feel like you won today and you're not talking to each other and you think you hate each other or whatever. You are not going to be happy 10 years from now when you don't get invited to your daughter's wedding because you can't be in the same room with your husband or your wife, whoever it is that didn't get invited.
Right.
That you don't want that. And it's very, very sad that those type of things happen, and they do, because people want to go for the throat.
Yeah.
And it's not worth it.
Yeah, thank you for saying that. I mean, that's one thing this podcast is about, is trying to help people go through the divorce process to save financially, but also to save emotionally, because you are right. You can become a bitter, twisted, resentful, revengeful person going through your divorce. And you can live the rest of your life like that, but all you're going to do is just burn up every relationship in your life if you do that. So
exactly.
I'm always so happy when guests say that, because people are not just going, "Oh, there's Mardi going off on her little tangent again."
No, I'm
so
with you.
true.
I'm right on the same page.
Yeah, it's so true.
It's crazy, and I've seen it happen. We've both seen it happen. I'm sure.
Yeah.
And it's very, very sad. And we've seen it the other way too, when it's completely amicable, and people can in fact sit at the Thanksgiving table together as a big family. Maybe it doesn't happen for a couple of years, but eventually they can do it, because there's resentment for a while, but it's not long lasting.
Sure. And that's normal. We're not, and I think you and I are both on the same page, because we've talked about this before, is that we don't, people, like you said, people don't have to be best friends, but if they can at least be civil, if they have children. I mean, I went through a divorce. I didn't have kids, and I honestly have never seen my husband since then, my ex-husband. But the thing is, if I was to see him, it would be okay. I could say hello and go on about my day and not, not have to make comments or bring things up or whatever. But it's your choice how you want to handle it and how you want to move forward with life. Neil,
Exactly.
you have shared a lot of information, and we could probably talk for a long time
I'm sure we could.
on all the other stuff, because we didn't even get to the post-divorce stuff. Maybe we'll have you come back if you'd be willing to talk about that.
Yeah, you bet.
What do you think of what we talked about today is the most important thing that you'd like women or men who might be listening in to think about during this divorce time with regards to this financial management?
Well, so here's the main thing, and it kind of segues off of what we were just saying about, being decent to each other. But that obviously applies to the finances as well. Like I hear this part of what we were just talking about, where people will say, oh, I'm going to make sure he ends up with nothing, or she ends up with nothing, or what, just, you didn't get married with the idea that you were going to get divorced. It happens. People move apart. I get it. And sometimes there's some bad stuff going on. Don't get me wrong. I understand. Like, if there is any kind of violence, whether it's emotional or physical, that's a whole nother deal. I mean, obviously, that there's a lot more going on there than just for me to say, hey, like, still be friendly. I get it. That's hard. But in the situations where that's not happening, your husband and wife, particularly, I'm saying this to the men out there as a man, you may not be in love anymore, you're going to get divorced and so forth, but this is still the mom of your kids, right? And you've got a relationship in that family forever, unless you're not going to see your kids anymore, which would be horrific.
Right.
So make it work. Make sure there's enough money for everybody to live reasonably. You don't have to live as a king and have your wife live as a pauper. That's not the idea. So, just kind of see what you can do to chill a little and make it fair and equitable. Nobody's looking to get rich, and nobody should be looking to rip the other person off. Just do what's right. That's what I would say. I know that's very righteous of me and self-righteous in a sense, to be on my soapbox and say that kind of stuff, but I just believe it.
Yeah. And I do think that the more that people are open and say that, and again, with there are exceptions where this is not going to be possible. Like you said, if there's any kind of violence or abuse or anything like that that's been going on, you can see where that would not be potentially even a consideration. But that is not the majority of divorces. So, yes, thank you. Thank you for saying that. That's so important. But being a human being to another human being is sometimes the best way to go through these processes. So, Neil, if our listeners would like to learn more about what you do, or perhaps talk to you about working with them as a divorce consultant or financial coach, what's the best way to reach out to you?
Well, you are always welcome to email me or telephone me. My email is neil@thewealthcreatorcompany.com. You are welcome to call me directly. I answer my own phone at 818-606-7327. And our website at thewealthcreatorcompany.com. And you can go there, and we've got, a 26-week program you can sign up for free on there. And it'll just help you kind of get through some financial issues that you might be thinking about. And you can always give me a call and sign up for a free consultation if you feel that it's necessary.
Wow, thank you. That is so fantastic. All those resources. I will make sure all that information gets in the show notes, so it's easy for you to find if you're listening in. Neil, thank you so much for all your wisdom here today.
You are very welcome. Thank you so much for having me on. I really appreciate it.
Oh, you are welcome. And I'd like to thank everybody for listening in to this episode of The D Shift. And don't forget to tune in again to our next episode. Thanks for listening and supporting the D Shift podcast. If you would like to attend live trainings by our amazing guests and have a chance to ask questions and get answers from our experts, join the D Shift crew. For more details and to sign up, head on over to www.divorcecoachforwomen and click on the podcast page.